Hello everyone, welcome to the Ichimoku.co daily FX market review for the trading day ending Tuesday, June 30th. Well, firstly to the Euro US dollar, and here we see a black body candle formed after we saw some strong buying coming into the market and on the previous day's trading. The market finding resistance that day at 112.89, a previous important area, and today we haven't seen the Euro US dollar trade up to that area. We've seen selling coming in, the sellers closing with control on this black body candle, and the shift in momentum back to the sellers, not in a significant way, only a moderate size candle here. Importantly, however, we've seen the sellers finding support down around the Kijun-sen, trading at 111.27, and at the top of the Ichimoku cloud. And prior to the previous day's trading, we saw that area holding as support for the previous 4 consecutive trading days, and once again holding as support. If we do see the market bounce back off here, 111.46 may offer itself as resistance, as may the Tenkan-sen indicator trading at 111.82. But with the Euro US dollar trading with this very strong support below and that strong resistance overhead, very dynamic market, not a lot of price action going on here other than the day prior to today's trading, where we tested all the way down to the bottom of the cloud. So we'll be waiting for a breakout either to the upside above this 112.89 region or down below the Ichimoku cloud and perhaps clear this 109.02 level. Moving to the hourly charts, and we can see yesterday or today's trading as it has finished opened above the middle pivot point level, trading down through the Tenkan-sen to find some support roughly around that middle pivot point level, rallying up through there, and really no strong follow through. We didn't trade anywhere near the first pivot point level, which was at 113.75, and then we sold off to just hover around that middle pivot point level. So a clear lack of direction towards the end of the trading session. The market then interacted with the Ichimoku cloud and ended up trading within the Ichimoku cloud, giving us a neutral market in that longer term time frame. So what we'll be looking for here is the edges of the cloud to hold as support down at 111.50, or as resistance at the moment up around roughly about 111.77, but that will change throughout the day. And then the middle pivot point level trading at 111.63 to potentially hold as some resistance. Now if we do see selling coming in and the market breach down through the bottom of that cloud in a bearish manner, we should be looking to the first pivot point support level at 110.83 for support, and then down to 110.31. But if we breach through the upside, we have the Kijun-sen trading very close to the top of the cloud at the moment at 111.77, and if that's breached, we have potentially strong resistance at 112.15 at the first pivot point resistance level, and then up at 112.95 at the second level. Moving next to the US dollar Japanese yen, and here we see a continuation of the trend to the downside today. This second last candle on the chart with the very small body is the one we're analysing. Importantly, we saw strong price rejection from the 122 previous resistance level, now acting as support. The very small body here at the end of the downtrend suggests that the market is set up for a potential change of trend to the upside, and the small body represents a lack of net downside momentum, which is what we want to see while the market is trending down, making a lower high and a lower low. We've also seen the buyers take control of the market at the end of trading by closing up between the midpoint level and the high, and it suggests that the buyers here are the stronger party, and the longer shadow on the bottom here suggests that the sellers have strongly lost commitment down at that 122 level, and we'll be looking for confirmation of the change of trend with the market breaching up through that high of this current candle, which trades at 122.72. Now the problem for the buyers here, if we do see that change of trend, is going to be the potential resistance at the Tenkan-sen indicator trading at 123.15, then up at the bottom of that highlighted zone, which is between there and the Kijun-sen indicator, and the Kijun-sen may offer itself a strong resistance if we do see a rally up towards that area over the next few days, and that's trading at 123.89 at the moment. Now we do have a bullish market in that longer term time frame, and we need to bear that in mind, and we could see some upside momentum based on on that longer term time frame, the buyers coming back into the market. But just bearing in mind also that we have a negative market in the medium and fast term time frames, and looking at the Chica span, where it's actually closed here for today's trading has been within the price action. So we've seen a change of momentum in terms of the Chica span, and it's no longer supporting that strong bias in that longer term time frame. Moving next to the hourly charts with the US dollar, Japanese yen, and here for today's session we saw the market open below each of the Ichimoku indicators and then rally to find some strong resistance at the Kijun-sen indicator, and this highlights how important the Ichimoku indicators can be as areas of support or resistance. Now the market then sold off very strongly from that resistance with a very strong black body candle, sending the market into a very important second time frame downtrend, with the market continuing to make a series of lower peaks and lower troughs, only to find support at the first pivot point support level. The market then bounced off there, found resistance above the Kijun-sen and directly at the middle pivot point level, then selling off once again to find support once again down below the first pivot point support level, and rallying through the Kijun-sen by the close of trading. For today's session we have opened around the or just above the middle pivot point level, testing down through there on a couple of occasions, found them to close there, rallying off there to find resistance now at the bottom of the Ichimoku cloud. So some very strong resistance overhead at the cloud, extending up to roughly about 123. If that level there fails to hold, we have the second pivot point resistance level at 123.18 above there. But before we trade up to the top of the cloud, we have the first pivot point resistance level at 122.83. Now if we see any strong price rejection off the cloud, then we do have a confluence of strong support around this middle pivot point level, trading at 122.38, then down to the Kijun-sen, which is just below 122.32, and then the Tenkan-sen trading just around that level at 122.34. So some very strong support around here, and if the market does breach down through there, we'll be looking to the first pivot point support level at 122 to hold. Next to the Aussie dollar, US dollar, and some very unexciting trading today. As the market bounced off that highlighted zone of previous support for the previous day's trading, we did see a change of trend today with this current candle making a higher high and a higher low, but the market found strong resistance at the Kijun-sen and the Tenkan-sen, as we've seen for the past 5 or 6 trading days. We saw formation of a white body candle, so still the buyers have continued with the upside momentum in net terms, but the body is smaller than the previous day, so that momentum is not as great, and the market failed to close above that Kijun-sen and Tenkan-sen resistance, and that suggests that because we have this small body and a little spinning top type candle, that there is now potential for the trend to change. Having said that, however, we haven't seen the sellers take control of this market. The buyers still have maintained control, and they have closed between the midpoint level and the high, and that suggests that we could see the market breach through that resistance there, although I have some doubt about whether they do have the momentum to breach through there. Potentially strong support at 76.72 as we saw for today's trading, and if that area is breached, we could see the Aussie dollar trade down to the top of this highlighted zone. If the Kijun-sen is breached, then potential resistance at 78 cents, but a very unexciting market. Now looking at the hourly charts with the Aussie dollar, US dollar, and here for today's session we saw the market open above the Ichimoku cloud and then find support at the top of the cloud, and this really highlights how important Ichimoku indicators can be, and we've seen 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 consecutive candles, 11 consecutive hours where the market tested to within the Ichimoku cloud and at times down to the middle pivot point level, and that area holding a strong support as we see the price rejection as evidenced by the shadows. The market then rallied to find resistance very close to the first pivot point resistance level, then only to sell off and find some support at the Kijun-sen indicator, and throughout the new trading session as it's developing, we've seen the past 4 hours with the Kijun-sen holding a support, and now the market beginning to bounce off there with the buyers attempting to take some control. There is a possibility of the market trading higher up to the first pivot point resistance level at 77.33, and if that area is breached, the second level is at 77.62. Very strong support down below where the market's trading, extending down through to the Kijun-sen indicator 76.91, and if that area is breached, we have strong support at the top of the Ichimoku cloud, trading at 76.73, and the first pivot point support level is within the cloud at 76.66.